All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about 5 Defiance ETFs that I want to talk about today because I want to go over all of the Defiance ETFs that pay dividends. Defiance comes out with a bunch of different dividends. Some are very exciting, such as QQQY, JEPY, IWMY because of their huge and ridiculous dividends. You can see QQQY with a dividend of 105%, but that's not really true, and we're going to get into why that's happening in this video. What I want to talk about is I have the stock price histories of all of the Defiance ETFs, and I also have kind of their underlying stocks which they write their covered calls on. So what I want to do in this video is go through each's dividend history, their payout history, their current share price charts, and we're going to kind of compare them to their underlying indexes, how they performed, and we could decide which is the best option for our Defiance ETF. So if that does sound good, we're up to 5,393 subscribers. Please do subscribe if you haven't yet done so, and I hope you guys do enjoy this video. So first, we're talking about QQQY. It mentions that they have a 105% dividend. I think that is completely false. The reason being, you could see here that for the month of August, they've said that they are going to pay out a $3.46 dividend. I don't think that's true. What I'm going to go off on a whim on saying is I think that they're going to be paying about an 83-cent dividend, maybe 80-cent dividend like they've paid in the past. And one thing to look at as we're looking at Defiance, I do like their track record. I think it's a little bit better than the Yield Max funds, but I only personally own QQQY. It's the only fund that I own. You could see it right here. I get paid about $13, $14 every single month from QQY. But when looking at their track record, they started at about $1.10 per dividend. They kind of dropped down to 62 cents, but they've been pretty consistent about this 80-cent marker. And if we're going to do the calculation, we have 0.8 times 12 months in a year because they pay out monthly. And we're going to divide by the current share price, which is sitting roughly about $40, $39.73. For simplicity's sake, $40. We're looking at a 24% dividend on the current kind of share price and dividend distributions. But you could see here that they've gone from a $60 stock, this is kind of adjusted for the stock split, down to a $40 stock. That's a decrease of about 33%. They've been paying about 50% dividends. Maybe they dropped due to the fact that they did the stock split. But I am actually happy with my QQY position overall because my position has somewhat held its value, but it's been paying me out every single month. And I understand it looks a little different because the stock chart is down, but QQY is actually not doing so bad when you kind of reinvest your dividends. And that's all these funds are. They are on underlying indexes, which don't generally pay dividends. These are for people who want dividends and want to track the performance of, let's say, the NASDAQ 100 or the S&P 500. So going to the next one, we have JEPY, a 72% dividend. Is this one true or not? Let's scroll down here. No, it is not. Okay, look. JEPY started paying at 90 cents up here, but you could see that it's trickled down and kind of hovering about this 60-cent dividend. I think 60 cents is a good average for JEPY. The current share price sitting about $46. So when we do 60 cents times, we're going to go 60 cents times 12, giving us $7.20. I'm going to divide that by 46, the current share price. We're looking at about a 16% dividend on JEPY, which is not super crazy, which JEPY is the Defiance S&P 500 Enhanced Option Income Strategy ETF. You can see it trickled from $60. Same thing here, reverse stock split, probably a 1-to-3 ratio, and it is now sitting at $46. So in terms of share price depreciation, JEPY is held up better than QQY, but it's also paid less in dividends. So there you go. There's kind of the trade-off. Now we're looking at the next one, which is SPYT, paying a 20% dividend. This is the Defiance S&P 500 Income Target ETF. So what it looks to do is it trades based off of the S&P 500, and it looks to maintain about a 20% dividend. And this is true based upon, you can see here their distributions, where they're all hovering about 34 cents to 33 cents, and the share prices were made relatively the same. So you could potentially say this is providing a 20% yield and sustaining its current capital, which is pretty good. So that's looking like a 20% return. If they could keep this up, that would be really amazing. All depends on where the S&P 500 goes for the year. And currently, the S&P 500 on the year is actually doing really good. It's trended probably about 25 to 30% up, which is a solid marker. I'm going from 410 here all the way up to 563. Moving to the next one, we have IWMY. I always get this one wrong. This is the Russell 2000 Enhanced Option Income Strategy ETF, known for paying extremely high dividends, but also known for its pretty hard NAV erosion. You can see here, $1.25 was trending about $1 for a very serious amount of time. We're talking about like 5-6 months. So it's fairly consistent, and then it's kind of trended down here to about 90 cents, 88 cents, but I'd say it's fairly consistent, trading about 85 to 90 cents. That's what you can expect from IWMY. And of course, the performance, same thing here, started about $60, trending down. This is due to the stock split that they're trading at $60, or it says they have. Now they're trading at $40. This has actually performed better than QQQY if we look at it, because QQQY at a current November, so a couple months after QQY, IWMY was released, but QQY was not keeping up with the dividends. IWMY was definitely paying a lot more in dividends, as you could see, averaging probably about 90 cents per share. If we could see here, 92, almost $1 per share, whereas QQY was trading maybe about that 80 cents per share range on average. So IWMY could have potentially been very solid. In terms of the Russell, over the past year, we could see here that it's traded up probably about 25 to 30%, same or very close to the S&P 500, which is fantastic. So has IWMY kept up? I would say yes. Because they've traded down probably about 33%, but they've been paying out roughly probably about 70% in dividends reinvested. That definitely, I think, would have beat the Russell. I think that would have been pretty solid. But of course, I wasn't owning it, so I wasn't seeing personally for myself. This is just only my opinion. Now we have the last one, USOY, the Defiance Oil Enhanced Option Income ETF from Defiance. Man, is that a mouthful. And the reason being, let's see here. So they were actually released back in May 10th, 2024, something like that. And they go off the United States Oil Fund, USO. And over the past 5 years, USO has actually hit some pretty tough points, where in 2019 roughly went from $102 all the way down to a $20 stock, and has since then recovered. But I own USOY, I don't own USOY, but you can see here that from this, they're paying about a 75% dividend. I don't think that's true either. Okay, no, it is true. That's awesome. That is fantastic. 75% dividend, because they're paying out roughly about $1 a month, only about a $16 stock or ETF. So, I mean, very solid, but at the same time, you can see the price has gone from $20 all the way down to about $16, $17 in the past 1, 2, 3, 4 months. So that is about a 15% price decretion, but you've also been paid out probably just about that back in dividends. So has it been a complete loss? No, but definitely gone down for the most part. And we look at USO over the past 6 months, it's traded relatively flat. So maybe that could be why, with big swings to the upside and big swings to the downside. So overall, what do I think is the best fund? It's hard to say, because they all pretty much play out pretty similar. They all trend down over time. It all just depends upon what dividends they're paying out, and are those dividends able to be reinvested and cover those losses. So I do think maybe a mix of all of them might be good for a strategy. But of course, this is just YouTube. I don't own any except for QQQY. It's the only one I own. I don't own IWMY or JEPY, but they all pay dividends on indexes. Indexes are what you want to own, because they're very diversified and they cover a wide variety, and you can potentially earn income by being invested in some of these Defiance funds, and they're high yielding too, which is kind of cool. So we are currently up to 5,393 subscribers. This video is coming to a close, so I hope you guys enjoyed. I hope you guys stay tuned, and I hope to see you guys in the next video.